Welcome to the Earnings Whisperers. I'm Dr. B.
And I'm Benjamin Poole.
This was kind of a lackluster week in the earnings, coming on the heels of the Teslas and the Googles,
That's
right? The week or two before. But we did have some levels that hit, but no trades that we took. We're being very careful before we enter trades. So any other comments?
I was going to say, it almost felt like all the volatility was sucked out of the markets. We had this huge spike in the VIX last week, and then all of a sudden this week, all the stocks that were beaten up from the fifth low kind of started getting bids, but nothing like overzealous.
Kind of a float up,
It just
right?
kind of a float up,
Yeah.
and so the volatility, that's what we thrive on when we're trading earnings. We need these huge moves. And unfortunately, we weren't getting that.
Yeah.
But some of our levels did hit, even though we didn't take any trades with our earnings traders live. There were some levels that were pretty good setups.
I think that volatility on August 5th, that Monday, when we had that flash crash, it basically created all of the volatility for the next 2 weeks. We do expect, volatility to come in next week.
What's happening next week?
Nvidia's earnings.
Nvidia.
Why
That's
don't
right.
you tune in for that? We're going to talk about that, but first
That's right.
we're going to review what we looked at this week.
That's right. So here's the earnings chart. So everybody has access to this. If you go to verifiedinvesting.com, you have access to the earnings calendar. However, this is also placed in the earnings trader website. So here are some of the tickers that we gave you for in the earnings trader. So we had SE. So SEA is one of the tickers we gave. Home Depot. Again, none of these levels were really good enough movers pre-market, pre-market on Tuesday to get any kind of volatility. NU was another one that we gave. Cisco, what we expected to be more of the volatility. We didn't have anything in that, but again, another level that we gave out. Stone Cold, STNE, Alibaba, Walmart. We didn't give out the level for Walmart. It was at all-time highs, and usually with stocks that are at all-time highs, if we don't get a pullback, then we just kind of let them go. We don't have an advantage with that, and so we didn't put that level out. And fortunately, we didn't because it just kept going. JD.com we did put out, and then Deere. And so those were kind of ones that we were going to try to trade live. Cisco and STNE were ones that we're going to trade live, but they didn't hit our levels. So Dr. B is going to go over like ON we did put out. It didn't hit our level, but he's going to talk about what we kind of gave you guys as far as in the
why don't we pull up the levels that we had on the website just so I can see, because currently we're trading at 42.18. You can see that the all-time high was around 55. The recent highs were around $44. But again, we didn't quite get there. What was the first couple levels here, Ben, on ON?
So here were the first levels for a short, 44.29, 45, and then 45.79. So those were the levels for ON. And then we had some aggressive levels. Had ON dropped at 35. And again, this was aggressive level. So I like to give sometimes more aggressive levels based on the strength of a particular stock. So 35.19, 34.31, 33.43, and you can see the rest. So I gave quite a few levels, pretty tight together, so that way we can dollar cost average into these pretty well.
Yeah, so I think that's important, right? Not getting into trades too early, putting levels that are conservative, because when the earnings move, right, and they really move, it can be very difficult to dollar cost average through a position where you have a level that's too close to the current price action. So it looks like the first level was this double top around 44.29. You probably had a couple other trend lines and Fibonacci levels that were up above in the 45 and change level. So look, the level didn't hit, so we didn't take the trade. What's the next one?
So the next one we have is Home Depot. And again, that was another one that did beat on earnings, but it didn't have a big enough spike for us to really get in there. And let me show you what the levels that we gave out for Home Depot were. So the first level for a possible short was 370.17. Let me go ahead and erase this real quick. 370.17. So you had this really big red bar candle right here, which was going to be significant resistance. And then if it kept going up, we had levels all the way up to 381.65. And then if it had a fall, then our first level was 324 all the way down to 312.51.
Your first level here was 370.17.
That's right.
And I see this red bar candle that you're talking about right there, right? So let me just erase the previous. So you have this right there. That was your first level. Looks like this probably would have been an add level, and then a third level there, probably a stop out above, and a pierce of this. And then you had your longs lower. And really, we just didn't have enough price action, right, or enough movement, enough volatility. Price just moved in this direction, didn't get up to these levels, didn't get to your long support levels, and so we move on. What's the next one?
So the next one is NU. And we're not going to go over all these. Just kind of wanted to give you an idea of what we were thinking as far as like some of the trades on earnings. NU had earnings and it didn't really move. However, if you notice that 1391 was the first level that we gave, and Dr. B is going to pull up his charts, and you're going to see exactly why 1394 was a good level, and then 1429. Even though some of these levels don't necessarily hit, they could still be potentially good swing trades. And just know that these are good levels of resistance or support. And so they don't necessarily have to hit the same day. But because they are earnings trading levels, you want to start with a smaller position, just like you would on earnings, just in case it does flush through to the second or third or fourth level before you get a pullback to take profit. And these levels aren't necessarily for, that you can use them as day trading levels. However, if you're using for swing trade levels, that's why you want to stay smaller. And you might want to space out your ads as well.
Yeah. So what's nice is I still have the actual levels up on my trading view. Sometimes when I'm trading these stocks, I just I delete these so I can focus, but I still have these, which is what I posted there on the website. And you can see here that this first level here, 1394, right, was my first level. It actually hit yesterday and then pulled back. We'll zoom in for this. But look at this, it hit my trend line. This is actually why I put that level there. And check out where this trend line comes from. All the way from August 2022. So these are the types of methods we use to find the first level. And then if you go in, right, yesterday on the 10-minute chart and you look at that level, right, so you got a nice maybe 50-cent pullback, 17 cents, so about 1.2%. Pull back off that level. And what Ben and I have realized is that even though our levels don't hit after hours while we're trading them live, they still can act as support and resistance later on. Might be later on in the week, later that day, the next morning, later on in the week, or even the following week.
Right. So one thing that I will say, and I'm going to go over to Dr. B's charts real quick. One of the reasons that I say that you want to go smaller, lighter with your share sizes. When we're trading earnings, we're looking for this huge move up, right? Big move up, so that way we can get a much bigger pullback. When you're just kind of going up slightly into it, the pullback isn't going to be as great. And so even though you're able to trade this, if it's not a substantial move, we're only looking for a 10% move off of that intraday play. So if a stock goes up $10, we're looking for about $1, which would be about a 10% move off of the whole $10 move. So that's why these levels they're more specific to earnings trading, because we want that huge extension.
And notice how yesterday, this is kind of what Ben's talking about, right? This move yesterday on the 10-minute chart, move up, move up, move up, rapid move up to the upside here, pierces this level, and then we get our pullback, and this is where we can make our money right here, right? You're never really going to catch, if you catch the top or the bottom, you're lucky, frankly, all right? Really, you're looking to make your money in the middle, and that's the key. That's the key.
Right, and you could have actually traded it that day, and it depends on how much you're taking off of the table, but it hit the secondary level as well, and it pulled back off your secondary level.
Oh,
as well.
really? Yeah.
Yeah. So the
let's check
secondary
that out.
level. Yeah, you can go ahead and zoom out.
Let's see here. Oh yeah, I see that. Right there, 14.29, and pulled back a nice, 0.7% off that.
Right.
So had you traded both those levels, you would have made about 2% on this stock. And
Correct.
2% may seem small, but if you're trading $100,000, it's $2,000, right? If you're trading 10,000, it's $200.
That's right.
You just add that up over time, that compounds to a lot of money.
So EAT was another trade that we put out. So here was the first shortable level, 76.07. The first buy level was 61.67, and then the secondary level was 60.03, and then the third level was 58.38. So I'm actually going to switch to my charts, so that way you can see what happened here. Let's go to EAT. So again, the first level was 61.67. Now, EAT was an earnings trade that the volume on something like this pre-market is really, really, really light. And so I even let the members know, hey, this may not hit during market hours. So as soon as the market opens, this could be an opportunity. And look at what happened. It flushed through the first level, right into the second, and almost hit the third level. And then it had this really good bounce. So this is what we're looking for. We need price, volume, and kind of a slingshot effect. So that way, once it bounces, you get all those those sellers out, and then you can have this nice rebound. And if you look at the price action today, or the price today, it's actually quite substantially higher than that as well. So it's actually up to $65. And so you could have gotten in here, or this level, and even got out with a profit the same day. And had you held, you could have had an even bigger profit. This doesn't happen all the time. Sometimes it goes up, we get out, and then it continues lower, like what happened when we were in Intel. We traded that 3 times, but it continued to flush out. So we don't necessarily say that these are long-term holds, but just that most of the time our levels work out pretty well.
Nice,
So-
nice. So tell me, there were a couple others. I know Amat, the Amat level hit either yesterday or today. Let me take a look at that. I don't think
I'll show you so I'm going to show what the Amat levels were, so you guys can get an idea of what they were. So here were the levels on Amat. The first long position that Dr. B had put out was 201.55. We were really hoping that we could get some volatility in Amat. We had some levels, and we were looking to go long with our members, because I know some of you guys ask, well, hindsight is great. Hindsight's 20/20. What would you do actually in the trade? Well, we actually had our levels set and ready to go. So 201.55 is actually where I had my longs, but it didn't hit until today.
Yeah, so this was Thursday. This was yesterday, right? So if you look here, this is the daily chart on Amat, and you can see on Wednesday into Thursday, right, we had this gap up. So we gapped up, okay, didn't quite get to our short levels up in this area, and it didn't get to our long levels until today. So today it actually hit, here's the 201.55 or 53 area, and today it hit that level perfectly and moved up about a 3%, I think it was about a 3.4% move from that first long level. And if you look at this, say on the 10-minute chart, all right, I'll just erase a couple things here. But if you look at that level, again, here was the gap up, right? So here was the gap up. Then we gapped down today, basically right into that level, okay? Right into this level, and then we bounced from around 201.50 all the way to around 208.50. So that's a big, big move. Had you went long on that this morning, having these charts up on your, on your screen, it was just, spoon-fed levels for you. So So that's what we like to do. Just kind of give you guys the alpha and the support and resistance levels. Speaking of next, the levels and next week, Nvidia, right?
Yeah, that's right. So Nvidia reports earnings next week. So just like that the earnings chart that we had displayed at the beginning of this session, it will be displayed. Everybody has access to it. You don't have to be in the earnings whisperers or the earnings trader to get access to this. It's on verifiedinvesting.com. It's all free, right? And so it'll give you an idea of what we're going to be giving out as far as levels. And then, you can even go in and set your own levels and just be ready for the earnings trades. So Dr.
Nice.
B is going to actually go over the Nvidia chart.
Yeah, I'll go over Nvidia right now. So you can see here that Nvidia has run about 37 to 38% from the lows here on August 5th. This was August 5th right here. And a couple levels that I'm looking at, you do have a gap fill right here. Now, obviously, earnings is next Wednesday, so things can change quite a bit from now until then. But if you were, if this were to run, you have a couple levels here. There's probably a couple fib levels that I'd have to pull as well, along with some trend lines, all right, that will potentially act as resistance. So it really depends what we do leading up to earnings. And then in terms of, to the long side, there's a lot of buy the dippers out there, especially in Nvidia, and all these gaps, okay, all these gaps right here in the chart, they create areas of support for the longs, right? You have these pivots, these gaps. There's a couple other trend lines that come up to this area, so you'll probably have some support in this area. So it really all comes together when we do our final analysis and post those charts. You get to see, our lines, our support and resistance, and it really helps you be prepared for the after hours trading or, the following day if that level hits.
So it actually looks like Nvidia trades the following week.
Oh, it's the following week.
It's
okay.
the following week.
All right, well, there's a preview.
There's a preview of what's possibly to come.
What's next week? What are you looking at for next week?
So next week we have the bigger earnings. Like we have Toll Brothers,
Okay.
that's going to be trading. Lazy Boy, but that's not a big mover. So that's after the close. And then we have Target, we have Macy's. So we have a lot of consumer stuff. TJ Maxx.
Let's take a look at Target. That's a big one.
Okay.
My wife actually used to work at Target, so shout out to you, Kelsey. And I will say that Target is quite a mover. You do have a lot of volatility in this stock here. It was trading around $60, $80 for many years, and then we had this huge run to about $260. Now down to $140. So there's a lot of volatility in the stock. I think we will probably have some levels to trade on this. You can see that there are a lot of different gaps here on the chart. There's a gap here. There's a gap, well, it looks like this was already filled. There's a couple pivot points. So there's definitely some levels that we will be looking at. There's a trend line right here I see. There's some pivot lows here. So we'll definitely be keeping an eye on Target. Does that report after hours?
No, pre-market.
Pre-market, okay.
That's right.
Okay, so we won't be trading that live, but it's still something to keep an eye on. We'll have those levels out.
But there is Snowflake, there's Zoom, that as it's reporting, Wolf Speed, Synopsys.
Okay.
So there are decent earnings trades out. Wolf Speed, that's going to be a tough trade though. It's a 28% volatility. So something like that, we may not give you the levels out, or there'll be extended levels. Something like that's going to really move. But we'll have at least 8 to 10 charts to put out.
Awesome. Well, hey, I think that was a great analysis. Very good, and thanks for watching.
That's right.
And we will continue to put out these levels and show you guys, how we did for the week and what we traded and what we didn't trade and what levels hit.
So hopefully we have a little bit more to report for you guys next week, because we are going to go live with our members next week, at least one of the days. And so we're hoping to get a trade for you guys. So
We'll see you on the earnings trader.
Yep.
Sign up, verifiedinvesting.com, the earnings trader. We'll see you there.
all right, take care.